Hello, everyone. Welcome to our monthly roundtable. It is June. I was going to say May. It is really sunny and beautiful here in Toronto. I'm Irma Desai, editor of Move Smartly. I'm here with my colleague, John Pasalis of Velocity Realty in Toronto. And as always, we're joined by Steve Soretsky in Vancouver. Hi, everyone.
Hello.
Good to be
Steve, is
back.
it sunny in Vancouver?
It is supposed to be 30 degrees tomorrow. So we're early summer. It's nice.
Yeah, we're getting the same vibes here, and it is feeling very good, although it's very smoky. It's the fires from the east this time. Very bizarre. Anyway, yeah. Are you still getting smoke from Calgary?
No. It's been nice and clear here. But yeah, like I said, it's hot summer weather is here early, so maybe that will keep people from shopping from homes. Who knows?
Keep people from shopping from home.
We tend to find people when it's summer, they just want to drink on the patio and not sit in line waiting to get into the open house. So I don't know. We'll see. It'll be interesting.
Well, there's a business for someone providing beverages for those standing in line at open houses. All right. Well, on that note, Steve, why don't we talk about, let's talk numbers first. The latest numbers for the market. Where should we start? Steve, in Vancouver, what did we see for May? Just what are the numbers saying?
Okay. Kind of a mixed bag on like sales and listings. Like, listings were kind of just below like 20-year averages. So not horrible. I mean, certainly better than what we're used to over the last 6 months, has been 20-year lows in new listings. So new listings perked back up. Sales are also picking back up though as well. Getting close to sort of like long-term historical averages. So I think the big story again, though, is like if you look at months of inventory, which kind of weeds through sales and listings. So we're just over 2 months of inventory, which is clearly seller's market. If you look at standing inventory for sale, which is how many homes are currently listed on the MLS for sale, it's the lowest we've seen with data going back to 2004. So yeah, I mean, basically a 20-year low in standing inventory. So if you're a buyer out there, it's been tough. It's mostly been multiple offers across the vast majority of product. So yeah.
And actually, tell us a little bit more about that. How does that feel? How those numbers feel on the ground, Steve? Are your clients frustrated? Are, like you said, multiple offers? Or is there just not a lot to look at? And then every time you do,
there's not a lot to look at. Like we've had buyers that have been looking for like 6+ months and just been like, oh, this is so frustrating because like there's just nothing like decent coming to market. And then of course, then when something decent comes out, it's like, oh, everybody's looking for the same product. And so like, you get like these super busy open houses, and then that, you get you're competing with 7 or 8 other people. And then of course, that gets pushed, the price gets pushed up, especially for people that have been looking for like 6, 7, 8, 9 months. There's like, I'm so over this like long, exhausting search. I just want to put an end to it. I'm going to pay like a pretty high price to beat everybody out. And it's hard to compete with that, right? Because like, well, I don't know. My view is like nobody really wants to blow their brains out on price, ideally, especially with mortgage rates at 5%. And like all these talks about like recession and like maybe the Bank of Canada is going to start raising rates again. It's like, but like I said, there's definitely people out there that are doing it.
Out of frustration, it sounds like. So you said the listings ticked up, but only slightly then. It's not that big bump that we were hoping for?
Yeah, not a big bump, but like I definitely feel like it's kind of like a moderation. We've gone from like 20-year low to like getting close to sort of a long-term average. Again, that's 1 month. So we'll see how June, July sort of shape up. But I think, and this is always like John and I have talked about this, but like 20-year lows in new listings is not sustainable. At some point, like sellers will come back to the market, they'll retest. And typically what happens is as prices go up, which they have, it tends to give sellers more confidence to retest the market. And so I do think we're going to see new listings get back to a more normal pace over the next, several months. That's my prediction anyways.
All right, John, let's get the numbers from Toronto. And then again, how do those numbers feel on the ground?
Yeah, I mean, sales, interestingly, now we're kind of at the point where we're talking about sales being up year over year. For the longest time now, we've been talking about a decline in sales, but Sales in May were actually up about 24%. Prices were down by 1%, but that was largely driven by condos. So condo prices are still down year over year. Low-rise prices are actually up slightly over last year. So low-rise being detached semis, row houses. And listing, same thing with listings and active listings. I mean, new listings are down about 20%. Active listings are down 23%. But again, the condo market and low-rise market are slightly different. I mean, the low-rise market, if you just look at number of detached active listings, we're close to like a 30-year low over the past 2 months, like, because Trev's data goes back to, I think, 1996. Last month was the lowest since then. Sorry, 2 months ago was the lowest. May was, I think, the second lowest. So there's just not a ton of active listings of low-rise homes, and in particular detached homes, whereas condo inventory is a little bit more typical, a little bit more normal, so a bit more balanced. So we're not seeing as much pressure on condo prices, but we're seeing a ton of activity and bidding wars for detached and low-rise prices. Exactly what Steve said. There's just not a lot out there. When something decent comes up, there's tons of interest, tons of activity on them. So it's still pretty competitive. I mean, we're starting to see maybe some signs that things might slow down a little bit. I mean, we were talking about that with Steve ahead of the call, and it's hard to put the finger on what it is, because like as Steve said, like summertime usually is when buyers hit pause, and especially if you've been actively looking for a home for 4 months, this is kind of the time where you're like, I'm sick of this. I'm sick of touring homes for 4 or 5 months. I just want to like relax this summer, go to the cottage, not even look at homes, and let's start again in September. So that's like a normal home buying cycle. And even though we tell a lot of times our clients to not do that, because July, August is usually less competitive for that reason, because there's just fewer buyers, people don't care. They just want to hit pause.
You're up against being Canadian. I mean, we only have a couple months.
John, to your point though, right? It feels like prices tend to take like a moderation in the summer. Like it almost like, it's not that the prices fall, but it's like, because you're not competing in the spring market with like 8 other buyers, that the prices don't get bid up. So like if you go and bid on a house in August, like you might only have like one other buyer that you're competing with. So obviously you don't have to push the price up to what you'd have to push it up into the spring market. So that's kind of how I think people should sort of interpret, the home buying cycle.
Yeah, and that impacts sellers too. And we tell our clients that, like, if you're selling, in April versus July, that could be like a 4 to 5% difference in your price, because if you're listing when the market's competitive, you could sell 2 to 3% above what you're worth. Whereas in a slower market, you might sell a couple percent, at the low end of the value, right? So as Steve said, it's not that prices fall, it's just that they're less competitive. So, prices might be at the lower end of market value or sale prices in July, August, because there might not be as many bidders. So, if someone is interested, probably worth looking. The other challenge is that fixed rates have gone up a little bit, so that might take a little bit heat out of the market, but I mean, we'll see how that impacts sentiment.
All right. And is the mood sort of the same, John, with your clients, buyers, sellers? What's the feeling on the ground?
Yeah, I mean, I think with buyers, for sure, it's still frustration, because there's just like not a lot to look at. I mean, I think there's just this anxiety. I think people just feel like they see prices going up and they're worried, you know what I mean? But it's not pushing them to pay insane prices, because there's still this limit based on, when rates are at 5%, you can only go so much. So I'm actually seeing just in the stats, like sort of a moderation on low-rise home prices. I mean, if we just look at sort of the average trends, they've been trending up since January, but for the past 4 or 5 weeks, they've it looks like they're plateauing a little bit, but again, we'll see how that unfolds as we move forward.
All right. So next, reintroduction of interest rate corner. We didn't need it for a little bit there. It started to get repetitive, but all of a sudden, while a couple of weeks ago, we were asking whether the Bank of Canada could possibly cut rates, we are now at the point where everyone's wondering whether the Bank of Canada might raise rates, and they meet tomorrow. And let's just review quickly how we got here. Inflation ticked back up very slightly in April. I think it's 0.1%. GDP growth from the first quarter came in higher than most estimates at 3.1%. And jobs, the activity in the job market was also higher than expected. But a lot of analysts, and I think, Steve, you and your colleagues on your Loonie Hour podcast cover this too, have noted that it's the arrivals. There are a lot of immigrants in that period as well. So whether it's just many, whether productivity is improving, no one really knows. So no one's really sure about those job numbers in the longer run. But for now, things are looking good for the economy, which conversely, given the inflation fighting cycle that we're in, is bad for what the Bank of Canada is trying to do. So given that we're going to be recording, we are recording now, the Bank of Canada will have met on June 7th by the time everyone sees this. Rather than playing our usual what will they do game, I'd like both of you to comment on what the impact you think on the market going forward, the real estate market going forward, would be in the two scenarios. One, if the Bank of Canada decides to just keep waiting and seeing and hits pause, or two, whether they do go ahead and raise rates. I don't know who wants to start.
Steve?
Okay, I switched my mic here. Someone's doing some construction work. I think that, I don't know. I don't think probably someone can timestamp this. I don't think they're going to hike rates tomorrow, with the day that we're recording this. I'd be surprised if they did, but maybe. I mean, I still think, like John, to your point, like everyone's like, oh, they need to raise, housing markets taking off again. Like, again, I'd caution people, this isn't like a demand side boom on the housing market front. I think it's more of a supply constraint that's pushing pricing up. I think housing starts are still rolling over. That's a huge drag on the economy. I think you look at the numbers, and it's like a lot of it was just like consumption was higher than expected. Well, of course, consumption's higher because you're pulling in, hundreds of thousands of new people every quarter into this country. But like, I think if you ask most people, like, I think most people would be like, yeah, you know what, things are slower. Like, the economy doesn't feel that great. So I don't know. I think the Bank of Canada will probably look through this, but I guess we'll find out. I think if they do raise, I think that's a potential psychological shift for people that are competing in the housing market, that maybe they dial it back a little bit. But you're still stuck with no inventory, and you're still stuck with people that need and want to transact.
Yeah, I tend to agree with Steve. I mean, I don't think any change in rates or lack of change is going to have a huge impact. Like, at the end of the day, the fact that fixed rates are trending up, which is what most people are going with anyways, probably is having a bigger impact. And that's kind of baking in the assumption that rates might go up a little bit. But I think I agree with Steve that it could have a psychological impact if it gives people the impression that, I think part of the boom in this early spring market was just this expectation that rates are going to come down sooner rather than later. So let's hurry up and get in and buy a home before they stimulate the market, right? And I think if rates go up, I mean, I agree with Steve, it could have more of a psychological impact where people just feel like, okay, let's hit pause. Who knows how long this is going to go? But he's right. I mean, at the end of the day, the challenge right now is a lack of inventory, and not a lot to choose from. So, even if demand pulls back, we might just see some moderation in prices, and then some flatlining in prices, very possible.
On that fixed rate front, just keep in mind that like most home buyers that are actively searching, like if they have any half decent realtor or mortgage broker, they would have had like they have pre-approval with a rate hold. And so they're, again, to John's point, right? Most people I find are doing like a 3-year fixed mortgage. That seems to be where the best pricing is, gives you a little bit of certainty. So you've probably got that held for 90 to 120 days, which means you're probably holding a rate today at about 4.8. And so, yeah, like if that expires, then you get renewed, or the new hold probably what, John, 3-year 5.1 ish,
something like that now. Yeah,
maybe, but again, who knows, right? I mean, like the bond market's been so volatile that like we could be talking about 3-year fixed rate mortgages back down to 4.6, 7 weeks from now. Mm-hmm. If you get a bunch of soft CPI data that comes in. I just think that the market's so all over the place. Like every data point that comes out now is like the market's moving in like a big way.
Yeah, actually, on that note, we have a good viewer question. I'll pull it in right now from Narinder Sadhu. Could the shelter portion of CPI keep rising as more renew into higher rates? And does the increasing amortization or adding the unpaid interest to principal increase the shelter portion and also increase the CPI generally as people have more cash to spend. So let's unpack this a little bit. John, maybe I'll give this to you first. This idea that, while real estate is one of those things being impacted by these, it's sort of like a really weird vicious circle that's set up, right? Now the rates are high, things have kind of gummed up. People are either not wanting to sell because they don't want to lock into a new rate or have that scrutiny around what they're paying. The market's become very sticky. That's causing these weird price jumps, especially for single family homes. Renters are also facing a lot of increasing pressure. So how does that then feed back into the CPI?
Yeah, I mean, it's
and are you in this vicious cycle that just, and what needs to shift there?
It's a great question. And certainly I think we saw this, I think in the latest numbers that, housing is actually contributing to the higher inflation, ironically, we're seeing today. Yes, it is. It's the shelter component. So there's two kind of main components that, we want to think about in terms of how the resale market is impacting it. One is rents. So as rents are surging, the inflation for rental housing, of course, is going to increase considerably as well. And we've been hearing about rents in major cities in Toronto or in Canada going up 15-20% per year. That is fueling inflation. The other side is the owner occupied side, which is based on, something they call like a user cost model, which looks at what is the average cost of sort of living in a home. We have gas going up and we have, of course, interest going up, right? And while interest rates were going up over the past year, at least part of that was offset by falling prices, you know what I mean? But now prices are going up. So you have house prices trending up, you have interest rates that kind of, relatively high right now compared to the past decade. And all of this is contributing to higher, CPI. And I mean, interestingly enough, I was reading, there's a great article in Bloomberg that was talking about how, I think it was Eric Hertzberg who wrote it, that, even our federal government's policy sort of stimulating the economy and our population boom is actually kind of fueling the economy and the housing market, almost like working at odds of what the Bank of Canada is trying to do, right? When your population's booming, like Steve said, it's like you're importing GDP, you're importing, you're importing that in your basically accounts, and that's kind of contributing to the growth that we're seeing. So again, there's this tension where the federal government's doing one thing, kind of stimulate the economy. Tiff Macklem at the Bank of Canada is trying to pull it back. And he has this pressure on, inflation in the housing sector. And it'll be really interesting to see how that all unfolds.
Yeah, John, that's a really good point. Because it's, like you said. And the funny thing is, right, is that okay, so Tiff Macklem kind of has to keep his foot on the accelerator. Even if he doesn't raise rates, it just basically means he has to keep them higher for longer. Because basically, again, immigration is sort of papering over all of our sort of what would be weakness and probably economic growth. And so by doing that, it actually it's actually going to create, and it is already creating a drop off in housing starts, right? Because these developers are I can't make these numbers work anymore. My cost of financing this construction is up through the roof. So it's actually almost creating this doom loop, which is rates must stay higher for longer, but you're importing more people as housing starts roll over. It's it doesn't set up a very rosy picture 2, 3, 4, 5 years from now. It's kind of a mess. And then I just actually wanted to also add one more piece. There was a good note from a guy on Twitter there. His name's Mike Green. He's really well followed, super smart guy. Right. He wrote a Substack, but he put a piece in from Alan Blinder in 1982. Alan Blinder was he worked at the Fed. But anyways, the quote says, so remember the 1980s, Paul Volcker, inflation, et cetera. So he says, quote, the initial impetus for accelerating inflation in 1978 came mainly from the food sector, with some help from mortgage interest rates. The further acceleration into the double-digit range in 1979 mainly reflected soaring energy prices and, once again, rising mortgage rates. Finally, mortgage interest carried the ball almost by itself in early 1980. And I feel that's kind of almost what we're seeing today, which was the last reading, 0.6% of headline CPI inflation was just rising mortgage interest costs. It's nuts. So yeah,
Yes. And spotted here, I think early, John, you predicted a while ago, one thing when we were starting to fight the inflation by, in a weird way, cooling real estate, you said this is going to eventually cycle back in. So the CPI, of course, is a consumer price index. It didn't spell that out, the measure of inflation. So thank you for that question. It was a great one. Let's go on now to slightly different tack, but I think you'll see everything will come together in the end, to another big story that we've been covering here on Move Smartly this month, and that is the change in the city of Toronto, the decision to allow single family lots to have dwellings of up to, so more multiplexes, up to 4 units. And this ruling is now going to change that across the city of Toronto. So mainly suburban inner suburbs in Toronto had restrictions against this kind of development. And the decision now by the council is to lift that. So on our channel, we've been interviewing a lot of experts on what these changes might mean. I invite you to check all of that out. I just attended a full day conference here in Toronto. A lot of excited industry members on the smaller builder, smaller financing side about what these changes might mean. But as we know, sometimes these headline stories have a way of getting us carried away. And I'm wondering, Steve, what your take is on maybe some of these changes and what the impact of that will be. And I want to say that first is because in BC, we talked earlier this year that there's a measure to allow more density in BC province-wide. And I believe in Vancouver, the 4 units on a single family lot was allowed up till now. And there's now maybe even a city council intention to think about 6 units on a lot. And in addition to that, you have experience of building a very nice project out in Calgary that similarly introduced multi units onto a single lot. So given your experience in this area, I'm wondering what you think these changes will mean for the market. Will the impact be quick? Will the take up be fast? Will it be slow? And who will be taking up these kind of projects?
yeah. So the BC government saying they're going to override all municipal zoning across the province to say we're going to allow duplex, triplex, fourplex on not all lots, but like the vast majority of lots, depending. So they're kind of working those details. They'll have them in September, most likely. Now, the city of Vancouver now has already just announced a pilot project that's saying, okay, on all, single family lots zoned RS1, it's like one of the designations there. On a small lot, they're going to allow a triplex or fourplex. On a large lot, they're going to allow up to 6 units. It's a pilot program. They're going to take like 100 applications to start. So yes, this is the direction that we're moving in. Again, John and I have talked about it. Single family houses will continue to sort of fall by the wayside and be this luxury product. As we get this densification. The problem I see is, well, I think this is a very smart program for the long run, because clearly, single family houses starting at $2 million doesn't really work long term. The problem I see is that the numbers are really hard for a developer to pencil. So if you actually say, okay, I'm going to buy a lot, this piece of land, and then I'm going to build 4 units on it. The time you pay for the land and you pay for the construction, and the developer's got to at least make a small profit, the numbers are just razor thin. And so I'm not convinced that you're going to have this massive uptake and hundreds of shovels in the ground, starting next week. I actually think the numbers barely pencil at all. So over time, I'm sure the market will sort itself out and figure that out. But as it stands right now, it's razor thin.
John, I know you have some thoughts about, while I believe you welcome these changes. I mean, it's great for maybe households looking for individual projects or solutions to multi-generational questions. Maybe we'll start to see some projects like that, but you wonder about the numbers when it comes to solving our housing affordability crisis.
Yeah, I mean, I've been suspicious of the numbers before they even passed these changes. I think a lot of the YIMBY groups have been, pushing for this and arguing this is going to, transform our housing market. At least these are the arguments before these were passed. I mean, and interestingly enough, now that they are passed, even most of these people who supported them are basically coming around to the same conclusion, that Steve just said that it's going to have very, very little impact. And that is because it's so hard to make the numbers work. You know, in theory, when you upzone real estate, and by upzoning, we mean like allowing more housing to be built on a particular parcel of land. Like in theory, that should make that land more valuable, right? But the challenge in markets like Toronto is that we have bid up the value of land so much now that even if you go from allowing just a single family home to 4 units, it still doesn't make financial sense. Once you factor in, of course, like not just the land cost, but the construction costs to build those 4 units, right? So it's extremely hard to make sense. I mean, once you just do the numbers, it's hard to make sense as an investor. You might see some people doing it for multi-generational housing. You know, people who want their parents to live in 1 unit and the kids live in the 2nd unit or something like that. But I don't think we're going to see of fourplexes, you know, and many of these housing advocate groups who have been pushing for this are basically now saying fourplexes aren't enough. We need sixplexes, right? But it's this never ending cycle, you know, again, I mean, it took them like 70 years to pass fourplexes. I mean, we've been kind of waiting for this change for that long. By the time we get to sixplexes, I mean, good Lord, who knows how long that's going to take.
Hey, just to chime in there, I've had a bunch of people that have like reached out. I don't know about you, John, but I've had a bunch of people reach out and be like, oh, this is a good idea. Like, I'm just going to like, should I go and buy like a single family lot and then just build like 3 units for my family to live on? And like, I can have like my brother in 1 unit, me in 1, like, and I'm like, I don't think people realize how expensive it is to build, at least in Vancouver and Toronto, which is like, I ran the numbers on it. It's like you're going to be 500 times. You're going to be like almost 500 a square foot between hard and soft costs. So if you take that and times it by 1,500 square foot units, it gets out to this. And as an end user, you got to carry that burden. You have to carry. It's going to be like an 18-month construction. So you got to get approval for financing, not only the land, which is going to cost you like $2.5 million minimum, but another $2 million for the build. So you got to finance like $4.5 million
for 4 units.
For like 4 units. Like it's just like, these are not projects that like mom and pop can just chew off and do on their own. Like these are like, it's a lot of money, and you got to carry 4 million plus in debt, for several years, really. Cause it's, you got to go through the not the rezoning, but you got to go through the development permit application. You got to deal with your architect. Then you got to get the builder to go in there. Everything takes longer than you expect. So yeah, it's not that cut and dry.
Yeah, I mean, and even here, the land cost is lower. Maybe our units would be smaller, but you're still going to be spending $700,000-800,000 a unit. And like, if you look at it compared to like multi-residential buildings, I mean, you're not buying multi-res buildings for $800,000 a unit, and it's going to be very hard to make the numbers work. So even as a newer building, I mean, you can't really compare them to condos. Like just the rental income is going to be really, really challenging on these types of properties.
Yeah, just running the numbers now. You're about right. Yeah, I had it about $750,000 for like a 1,500 square foot unit, and then now add on the cost of the parcel of land. Yeah. So you're like, you're for 1,500 square feet, you're basically at 1,450 ish. So, and resale value is just over $1,000 a square foot. So yeah, I mean, you might be able to make $100,000 a door.
Yeah.
Which is not a lot of profit.
I don't even know if you can do that. And the challenge is these are very hard to sell. Like the only, like as a builder, you're buying this because you're holding on to it for like 20 years. Like it's very hard to sell these projects once they're done as like these small triplexes, fourplexes for like, at least in Toronto, you have to sell them for well over $2 million. And that's a lot of money for such a small property.
That was very consistent with the discussion I heard at the Broadview Hotel with the Missing Middle conference that happened earlier this month. Most of the projects being described by the people that did them, they admitted this is a long play. how many people are willing to make this long play. And in many cases, they were solving particular family problems, or there was thought to eventually my university kid, this will be the cost of them going to university. So there's that longer play. So, there are ideas around there. Steve, interestingly enough, there was a huge discussion amongst all the participants about that issue where you've got parents that are maybe want to help kids, multiple siblings, maybe they buy side by side as something that allows them to maybe allow a parent in later. These might be some kind of projects we might see. The thought was that in the GTA, it would have to take communication and perhaps particular groups to get interested in that, particularly in Scarborough or maybe some other areas. And only if one person then saw the other person doing it, could that maybe catch on the way we saw John in East York. That whole couple bungalows got changed into bigger homes. And then all of East York seemed to, turn into these bigger homes overnight. So I don't know. I think the jury's out. And I agree with you, John, that while everybody was excited, and I think they're right to be excited in what they've achieved, because I do have to say culturally, a lot of the arguments that happen at council are around not ruining the characters of neighborhoods. And, a lot of that language is problematic because usually the ruining of it is allowing more people in. The areas that you
I really can't emphasize enough that like most people should not be building these type of products. Like this needs to be left to a professional. Like this is a really good way to just like lose a shirt. It's just I mean, like it's not like, I don't know, like building like it was 30-40 years ago. Like there's so much like red tape, John, like even now, like BC, it's all we all have to build like step code 3, which anyone that's not familiar, it's basically the highest like level of like energy efficiency that you have today. It's like and that's really expensive to do, and you got to go through all these approvals, and you have to have trades have to be trained how to build to that code. We have some municipalities now going passive house. They're saying, okay, anything new now must be 100% passive house, which is like net zero housing, which is like, yeah, it sounds great for the environment. That's awesome. Do you know how expensive it is to build that? And you're talking about we want housing affordability. Like it just it doesn't make any sense.
So maybe not quite a Pyrrhic victory, but a more symbolic victory for now, and we'll see. So not going to see a surge of units helping us out with our overall affordability crisis, sounds like.
Which is, again, this is the big problem though, which is like, it's great. We're adding more density and we're increasing this, but like, how are you going to get the private sector to actually like really dig their shovels in and like get buildings? And then you're still pulling in like, 500,000 permanent residents a year plus all the non-permanent residents. Like, I don't know, like it's so beyond broken, and I just don't know how it's going to fix. Yes, we're going to have short-term volatility. Prices could sell off. Mortgage rates go back up to 6%. But like looking out 5 years, I'm struggling to see how housing is going to be more affordable.
Yes. Well, let's turn next to investors. Maybe, and I'm going to turn back to this theme, come back a little bit to some of these densification arguments. Could something work if something changes? But before we get there, there has been a lot of news this month on investors, getting to know not quite your neighbors, but your investors. StatsCan released a pretty detailed article that tried to better profile who the investors are in Canada and Canadian real estate. And I think the year they chose was 2020, and building on some research and other work before. John, I noticed you got a citation in there. Shout out. They tried to better spell out who investors are. And I believe they were looking at 5 provinces only: Ontario, BC, Manitoba, New Brunswick, and Nova Scotia. A shame not to see Alberta there. I wonder if it's just a availability of data issue. But having looked at that, it's a very detailed report. I'll put the link in our show notes, invite everybody to take a look. I'm just going to go over some of the key findings. So it turns out that of all provinces, BC had the most out of province and non-resident investors, more of them than Ontario. I think the highest proportion was Nova Scotia, but BC has a lot more, and it's notable, out of province and non-resident investors than Ontario did. Quite frankly, that number was surprisingly small for Ontario in my eyes. BC also has a lot more investor occupant investors than all provinces. And I was really surprised to see, again, that the number of investor occupant investors was so low in Ontario overall. So that's people who live in a part of a dwelling and rent out the other part. So here I'm just going to throw up the chart. We see the distribution of investor type. Interestingly, StatsCan team did work hard to try and flesh out the different kinds of investors. So they have an in-province investor. Adjacent to that is an in-province investor who owns maybe not a second residence, but a vacant land parcel, who the out-of-province investors are in yellow there, who a non-resident investor is. So they don't fall into the other categories. And then business investors, these are either governments or businesses that own more than one residential unit, and then the investor occupant that I described. I did think that cottage owners would fall into this, and I think they do deal with that. So invite you to look at the article to see how they parse that out. So let's just quickly move on to the next chart here. So their findings were not altogether that surprising. People aged over 55 are represented in the investor class greater than you would expect from their share of the actual population. But the other stat that was interesting is how many immigrants are investors, and whether this share, what that share looks like relative to the percentage of immigrants, their share of the population percentage overall. And on this measure, it's so-called established immigrants, which they call anyone that arrived before 2010, that seems to have an oversized representation. So they have more investors than you would predict if you just looked at their population share alone. And in Ontario and BC, interestingly enough, all kinds of immigrants are overrepresented in the investor class relative to their share of population. So those are the only two provinces that showed that. Now, I found that very interesting. Obviously, it shows motivation on, or a play that's become very common. Come to Canada, invest in real estate. I guess that message has gone out. But what was interesting is the disparity in income between investors. So and it was most pronounced in BC and Ontario. In British Columbia, Canadian-born investors had an average individual income of $105,000, whereas immigrant investors had an average individual income of $80,000. In Ontario, the average individual income for immigrants was $80,000 and $100,000 for Canadian-born investors. So if immigrants are investing in real estate more, they're doing it on less. I found that intriguing. I don't know. I know you both tweeted about this article, whether anything else stood out to you, or I don't know who wants to take the first stab.
John, you want it?
Sure. I mean, listen, I think a lot of the, I think the work that StatsCan's doing is super important to track this. I mean, I think it's important to, differentiate different types of investors. I mean, from my perspective, Steve is a model real estate investor in Canada, in the sense that, I mean, correct me if I'm wrong. I mean, you bought a single family home, right, and converted it to 4 units, which to me is like what investors should be doing, and that
but those units aren't affordable.
Okay. Oh my gosh. Okay. That's a separate issue. That's not your fault. That's our government's job of driving up rents. You don't set the market rents, buddy. It's our governments who do that. So that's the ideal type of investor. I mean, obviously, if you're buying single family home, converting it, that's huge. The investors I think that are becoming more challenging and problematic are, of course, people who are just buying single family homes and just renting them out and not just leaving them like that, right? They're just using it as like a asset in their portfolio. This is partly why there's not as many homes to choose from in Toronto. Like the number of people who move out of a detached home and say, I'm not selling it, is massive, and it's growing rapidly. This is partly why detached inventory is so low. And some academics are like, who cares? It's contributing to the rental supply. I mean, yes and no. It's also driving up housing costs and house
John,
prices.
on that, did you not cite a piece of research that put that number at 15% of single family homes? And was that in the GTA area? being owned by investors?
My stats were in the GTA. I'd have to look at the stats specifically, but the number of people who moved out of their home and have just rented it after is like probably the fastest growing type of investor in the GTA.
Right. And I thought there was a BMO paper or something that was trying to quantify that, but I don't know. I'll look for that.
Yeah.
I think you tweeted it. I'll add that link as well. So let's put a pin in that for a second. And then I just want to make a comment about another report that came out. And then let's return to this. Are investors helping or hurting, and who? The Urbanation report from a friend of the show, Sean Hildebrand and Benjamin Tal from CIBC, came out as well this month on the state of condo investors in 2023, again in the GTA area. Now, again, it's a very detailed report. I'll put the link in the show notes, invite everybody to take a look. One of the biggest headlines to come out of the report, as reported in the Toronto Star, was more than half of condo investors are losing money, and that's going to hurt renters. Now, the argument here, we all get it, if condo investors pull out, especially new starts falling, and Steve, you touched on that, this report goes into it, the number of new starts. Not only does that lead into less investment in condo units that then turn into rentals, others have been commenting that might actually start to turn into that job slowdown in the construction sector that we're expecting in the second half of the year. So that's an important thing to keep an eye on. So that's what keeps the rental pressure on rental prices. But there's another group of people, the end user of the condo. And my question to you is, both of you, if investors start to see this as a less lucrative product, does this not mean that there could be more condos left for end users? And could this not increase supply for them and perhaps moderate prices somewhat? Or, is that just hopeful talk?
John, I don't know. I think this is the one time in the show I might disagree. I think investors are, I think it's a scapegoat. I think that, the US, which is the most capitalistic society, clearly people invest in real estate in the US, like they don't really have the same issues that we do. So I'm not convinced that investors are the problem. I just think it's important to sort of like, let's dig under the hood a little bit. So per that StatsCan data, it's just important to contextualize this. The top four sort of areas were actually Woodstock, Sarnia, London, and Chatham, Kent. I don't even know where that is, but anyway, somewhere in Ontario. Apparently, over
Southern Ontario, baby.
Yeah,
represent.
So apparently, over 80% of apartment condo investors were investors in those condos. But what StatsCan failed to mention was that is mostly because they're actually all purpose-built rental apartments that are legally structured as condominiums. So they were purpose-built rental buildings structured as condominiums. So these were investors. It's basically saying, well, your pension fund that went and built a new apartment building for long-term rentals, but structured as condos is investors. So it's just, and the one thing I'll bring up is just understanding the pipeline of new housing and how it gets built. I can tell you specifically in BC, you typically require 60% of your units to be pre-sold in order to obtain construction financing. And you have 12 months per the guidelines per BC government, you have 12 months to sell 60% of your units. Relying on end users to absorb 60% of those units, in my opinion, is just not going to happen. So if you want more housing supply, you kind of need those investors. And the one thing I'd argue there is everyone just thinks, oh my gosh, look at the last 10 years, pre-sale investors, they made all the money. They're like these crappy, shitty capitalist people feeding at the trough. The reality is John, I don't know about you, but let's see how the next 5 or 10 years go for these guys. Because right now they're paying 20% above resale prices and mortgage rates are trending higher. So I think a lot of these guys, are going to be losing money over the next 5 to 10 years, not making money. So let them take the risk. I mean, we see all these projects in Ontario. We see some here in BC where pre-sold 18 months ago, developer failed and didn't get off the ground, deposits being returned. And you just tied up your money for 18 months. Pre-sales are risky. And a lot of small developers, I'm working with one of them right now. Like, let's say it's a 20 unit building. Well, if it's 20 units, it's probably a small time developer. They're probably not investing $500,000 into a presentation center and this and this and that. So what they're doing is they basically say, okay, like, I need to pre-sell 60% of the units, but I don't even have a presentation center because I can't afford it in my pro forma. So I need to convince a bunch of end users to buy a piece of paper, and they can't even walk through a presentation center. So I think it's just like understanding the dynamics at play that, like, okay, if you remove investors, you'll probably have less new housing supply coming to market.
But Steve, just to push back a little bit, what about, Urbanation reports, and this is the GTA, admittedly,
Yeah.
so not quite in your neck of the woods, but if 50% of condo investors are now losing money, so, I think the quote was the days of, it was a really nice one too, John, I don't know if you remember it.
The glory days of easy money or something like that.
Yes, are over. And this is Steve, who's actually an analyst of that condo market, he's saying this. So is there nothing to the fact that if some of this inventory is released by investors who just cannot make the numbers work, they release it in the GTA where we know there is a lot of household formation without anywhere to buy, anywhere to go. There is no chance that this buildup in inventory would result in some moderation in maybe particular kinds of condo units?
No, I think it would, right? Yeah. So it's like, okay, if all these people are getting squeezed, like, remember, like, we're trying to ban these people because they're bad people. Like, meanwhile, they're literally subsidizing the rent. They're losing money on the rent. Like, I don't know. To me, that sounds like a really crappy investment. Personally, that's not how I invest. But if this guy wants to go and overpay and then subsidize someone's rent, like, who cares? Good for him. Like,
sorry, I think I didn't say that clearly enough. It's almost like a competition is coming up now. Yes, the renters will suffer because they're the condos have been in the GTA the overwhelming supply.
Yeah, are they arguing that it's going to go to market?
End users. And it's hard to believe that, there are, given the pent up frustration of especially those households forming families.
I think
sorry, John, to finish, if there's not just a bit more increase of those condo units, there's no chance that I've heard of some slackness, for example, in the 2-bedroom condo unit sector in Toronto and Vancouver.
Yeah, and I think the Urbanation report is, yes, it'll provide some moderation in the resale market potentially, but of course that'll put pressure as the flip side on the rental market, right? Because
it's Hunger Games out there, people.
Yeah, I mean, the challenge is we're not really building purpose-built rentals. I mean, and to me, this is one of the idiotic policies or housing policies in Canada, like 40 years ago. Like, we stopped building purpose-built rentals and just decided to build condos as mom and pop owned investor units, which, I mean, I say it's idiotic because it's not the best way to structure a housing market. I mean, it has been great for the investors, but this is not permanent rental stock, right? So,
and a lot of countries did that too. Australia. We're going to have Sean on because I do want to dig into that.
Yeah.
And another shocking stat I want to dig into is of purpose-built rentals in the GTA right now, the average rent is $3,000. So these purpose-built rentals in the GTA are high-end luxury products.
Well, that's close to what condos are too, right?
Condos are 24 average.
So
it's a huge discrepancy.
To chime in there, I used to live in a purpose-built rental building in Vancouver. I think it was awesome, right? Like, it was like, I got to live there. I knew that I was never getting kicked out so long. I mean, I could have hypothetically stayed there for the next 20 years. And basically the BC government said, like, this developer, this owner of this asset is only allowed to raise the rents like 2% or 2.5% a year. It's like, like, what your cost, like, it was like, it's like the deal of a lifetime for the tenant. So, like, I think the reality is, and I tell this to people that are going out to rent, I say, try to identify a purpose-built rental building. Yes, you're going to pay a premium. I think you should pay a premium. You should pay a premium because, like, that's like, you have secured housing for like indefinitely. So I think you should pay. And the reality is these developers know that too, is like the numbers are so tight. I just ran some pro formas for rental myself. And like one of the things that kind of hurt us was CMHC fees as of June 6th are going up $200,000 on this project. So CMHC says we want affordable housing. We're raising our development charges $200,000. So now, and then your cost of interest rates are going up. So that destroys the pro forma. But you have to basically start high as this purpose-built rental owner. You have to start a little bit higher and be patient for people to pay that rent, knowing because you can only raise your rent basically like 2.5% per year afterwards. So it's like basically, yes, the government is trying to help the tenant pool because rents are high, it's expensive, it's unaffordable. So we need to do right by the tenant. But by doing that, you're actually, this is why people don't build purpose-built rentals, because it's like your costs are not going up 2% a year. Your costs are going up like in real estate maintenance and construction to maintain a building. Your costs are, and insurance, your costs are probably going up 5% a year minimum. And you're allowed to raise the rent 2%. Like that just doesn't sound like a great long-term investment. So people are like, well, I'd rather just sell them as condos.
Yeah, actually, Sean, and I think Sean Hiddlebin of Urbanation, his prior report was with Build, the industry on purpose-built rentals and the real bottlenecks, Steve. And they were pointing out exactly some of the numbers that you're pointing out in the GTA. So I think there's a lot of sense to what you're saying. The only thing in the GTA, John, is that grandfathering of the rent cap.
Newer buildings.
So a lot of people here are in those, in older condo buildings up to, was it 2008? 2018, that are under rent control here in the GTA.
Yeah,
so that what
are not rent controlled.
Right. Anything built or completed after that in the GTA is not rent controlled.
Exactly.
And in Vancouver, is that not the case? Are condos, none of them under rent control?
Well, they're technically all rent control. So yeah, if you buy like if I buy a brand new condo tomorrow that's already constructed, I put the tenant in for, $3,000 a month. Like next year I can raise the rent 2% or whatever the government tells me. Right now it's 2%. I think historically it's probably averaged, before this NDP government got in, it used to be inflation, whatever inflation was for the year, plus 2% on top. So it was like, okay, it's reasonable. It was still like a pretty good deal, I think, for the tenant, because like in reality, like obviously inflation's been, I think, underreported for the last decade plus. But yeah, so that's kind of the situation. And I just think,
but purpose built, like you said, it offers that idea that, this is yours. And like you see in Europe, that culture of this is my dwelling for life. So, it allows you in some ways, you think, to establish families around it a bit easier, not worrying that you're going to get thrown out of your school district and so forth. So
I think
it'll be interesting.
Yeah. And like I said, I think it's a phenomenal product. I think we definitely need a lot more of it. It's just like, how do you incentivize more of it? Because again, if you have capital to put to work as a developer, you have investors and you have a certain hurdle rate that you need to get your investors. Otherwise, like, again, why take the risk? Why not just buy a GIC at 5%? So like, there is a hurdle rate. And the reality is governments, while they're trying to help sort of the tenant pool, I think they're ultimately restricting some of the supply from coming to market, because again, it just makes more sense to build it financially as a condo. And then in order to sell it financially as a condo, you need to basically have the investors show up at the pre-sale center.
Yeah. I think this is back to housing as the definition of what do they call ugly, hairy problem?
Well, I just think like putting the whole picture together, it's like, it's easy for like people on Twitter or YouTube or whatever, just like from an outsider's perspective, just to like point, right? So they point greedy developers, it's greedy investors. It's like if you actually understand like the whole system, like it is pretty broken, but it's so complicated. There's so many moving pieces. Ultimately, again, at the end of the day, it's like the banks are the ones that say, listen, we will lend you money or we will not lend you money. And you need to hit these certain thresholds in order to do that. Like, so it is complicated. And so it's not an easy, point to one thing. No. I know, like, in the past, right, we've pointed to like the foreign buyers. Well, okay, we tried that. We did the 20% tax. We did the foreign buyer ban now, like 7 years later. And, to what we've talked about in the beginning of the show, like prices are going up again. Like, so it's not a simple solution.
Well said. The silver bullet just keeps changing. Now this month it was density, increasing density. Let's see. But great points made across the board. John, I don't know if we're over time. Anything you want to add? I mean, we are going to return to financialization of real estate because that's the big thing that, we're talking about here. John?
No, I think Steve kind of covered a lot of it. I mean, 100%. The challenge right now is builders are basically looking at what pre-con investors are paying and thinking, I wouldn't make that investment. Like, it doesn't make sense. When you look at the prices, when you look at the rent, it just not make financial sense, which is why we're not building purpose-built rental. So they're basically saying, let them make that bet. Let them pay $1,600 a square foot for an apartment and rent it out. And that's why we're not building them right now, partly because the investors have kind of bid up prices and they're just kind of, basically that's the marginal buyer sets the price and they're the most optimistic bidders.
And
Yeah,
John,
sorry
to interrupt. I think that's just a great point to like kind of wrap it up, which is like, I look at these projects, I'm like, man, good luck.
Yeah.
And if you want to put your capital to work and finance that development, that's ultimately going to end up in rental units. Great, good for you. But I think like people are so used to patting everybody on the back for the last 10 years about how much money they've made in pre-sales. And I'm really skeptical that that's going to be the case moving forward.
Yeah, educate yourself. Those the papers will be in the links. They're saying much the same thing. Thank you guys so much. I thought this was a really great discussion. Some different opinions. I've got to argue the other side, the person on the street, the renter on the street, the buyer on the street. I think you're a good investor, Steve. I don't. But I do understand the questions. You know what I mean? Like, sure, we can say, oh, look, people don't understand the complexity. But to be fair, policymakers and other people have made something that is so fundamental to life around the world, in Canada too, so gnarly and messed up that, I think this is why partly we're getting all these, really black and white discussions that get us nowhere.
And I think there's a strong argument to be made that government should get into, not to a large scale, but I think they should definitely they're going to have to fill in some of the void in the private sector, right? Especially as housing starts to roll over right now. Mm-hmm. Yeah, the government should start building a little bit more public housing. They clearly haven't over the years, but it's probably a combination of all of that. And then, like I said, maybe we talk about limiting immigration for a couple of years, even trimming it down from 500,000 PRs to 350. See what that does.
Yeah. I mean, it all has to be in the mix, right? Actually, Toronto elections for mayoral elections are underway, and there's a few candidates talking about getting back into housing. So we'll keep tracking that. And like you said, it's going to be a lot of different things. I always appreciate, though, because I get very excited about some of these good news stories. And then I know I always say to you or John, like, is this really going to get built? Is anyone really going to? And it's like, no.
YouTube comments should be phenomenal on this one.
For sure.
Yeah. No, I think people understand what we're saying. It's not what you would want to happen. It's realistically how the market is going to, act on this.
Yep, exactly.
So, all right. Thanks, guys. Viewer questions, keep them coming out. We'll get to way more in our next session. We just had a lot to cover this session. So yeah, keep on enjoying that sun, guys.
Awesome.
See you next
Thank
time.
you.